Check. Good morning, traders. It's Perry Wilkie with StartupTrading.com. It is Thursday, August 14th, around 5 minutes till 9 a.m. Eastern Time. So looking back at yesterday's session real quick, we just kind of were hovering on this call wall for the Qs all day. Kind of just ran right down into it and just sat there. Uh, kind of sitting there at the weekly call wall for the SPX or SPY rather, and just kind of hanging out, doing a lot of nothing. We did we missed these single prints by one tick yesterday. We kind of flashed down into them this morning and under. We'll get into that in a second. Looking at what that did to structure, we had some bearish single prints put in on the Nasdaq with a XS and A line, and then we had some bullish prints put in the Russell, and some salmon run trades go off in the Dow. So kind of all over the place yesterday, a little bit of a mess. Looking at the overnight session now, we've got coming down. We'd be opening under yesterday's low. If we open up to here, obviously there is a you know daily single prints, if you will, that go down to 64.35 around. Uh, it's actually 64.31 half is where they end at. So we'll see if how close we get to coming into that today, if at all, and then we'll have to see. We haven't opened yet. We'll see if we actually open around there. But the point of control from Monday was 64.62 half. The point of control from yesterday was 64.80 half. So we'll see if those bear anything out yet. And you can see there's a small uptrend line here in these candles. And then yesterday was just kind of a little, go nowhere, do nothing thing. So we'll see if, first off, if you get down that trend line, I'm sure there'll be an initial response if you draw that out on your uh, charts. And then we'll see if it's just a weak bounce or if, it leads to anything more. We did have a very weak print this morning on the PPI, right? The tariffs are starting to hit the tape, which, how can they not? And then we'll see what happens with that. The Fed was priced in. I put it, on the trading room trip. The Fed was priced in 100% to do a quarter point cut at the next meeting. I'll be interested to see if they back that off or not. Now it's about a month basically between now and when they're going to go. So that could fully get backed out if there's any signs of inflation, even though that's not what it's from. It's actually like a consumption tax, a national sales tax, if you will. That's what President Trump has really enacted. And then we'll see, where we go from there. So all we've done so far in the overnight is come back down here and get some fills in these single prints. You can see that there was total rejection so far by the ES and the Nasdaq for anything below that in the auction. So you want to watch the overnight low is going to be critical in today's session to see if we start getting any fills underneath that, or if we even get back down to it. There's no guarantee that we're going to leave the auction that we're in and start developing down here. I will let you know as we look at positioning here, there was a butterfly that a large institution put on yesterday, right? They were thinking that we were going to close today. This is 0 DTE. They were thinking we're going to close today right around 64.90 to 64.95 in the cash. And they basically to screw with that, they were looking at 64.35 to 64.40. This is around where we are right now. So if we start printing below 64.35, you're looking at potentially getting in some type of a negative feedback loop that we could get almost like a one-time framing free fall, like the opposite of what happened Monday, right? We could just one-time frame down with with no bid whatsoever all day long. I don't know if that'll happen or not, but this will be what I'm watching to see if we this 64.35 to 64.40 on the cash market, the SPX. Uh, to watch that, you can see there's a little bit of a prayer at 64.20, but it is a little bit of a prayer. Not a lot going on there. As we look at the SPY, right? Uh, 637 was, we'll even go down to 635. We're trading 642 right now, so no big deal. We're right here at the daily put wall, if you will. This is where support's supposed to come in today. It's acting as support right now. We flashed under it a smidgen in the overnight session, but this is the bottom of the range that was expected for today, and the top of the range is only 648 on the SPY. So no one really going out on a limb there. Of course, this can get run over in either way, but right now it's kind of holding in check as it's expected to. And then you can see there's a little bit of a floor, about 20 points under. It'd be about 24 points under on the ES where we are right now. So that'll put it right around 64.40 is where the 640 is going to be. And then we'll you know, see what goes on from there. Looking at the Qs, you can see it's a bigger mess, right? You got no one was really willing to go out and make any fancy bets on the Qs today. We're trading 577.61 right now. So we're right in here. You can see 576 is where we're at. We didn't get down to 576. So that will be your first stop on the bus. Remember, it's not 575 today, it's 576 to 575. So we'll see if that gets up. But you can see it's not really anything there other than you're getting more in the lower in the put demand, right, than you are in the call demand. So that would put us back in negative gamma, basically, which means that when the market goes down, the market makers have to sell. When the market goes up, the market makers have to buy. And that's your flip point, I would say, right around 579, 580 for that action. Above there, when the market goes up, the market makers have to sell. When the market goes down, the market makers have to buy. So it kind of dampens volatility above that line. So that's your 579 split on that. So looking at, you know, where we're at. I want to see if we start getting into this lower auction. So basically, below 23,800, we're at 825 right now. You can see we're sitting there thinking about it. And then you've got to get below 6450 on the ES. Other, Otherwise, it's likely to be a little bit noisy. And I'll just sit there and watch. I'd rather see something develop. To be honest with you, I'm all for getting a negative feedback loop that we just drop, you know, 80 to 90 handles. Keep in mind, we are down 100 points right now on the NQ, and we are down 26. So you get down right around 100 points on the ES. 90 to 117 is really where things either kind of stall out for the day or you really pick things up. So we could get just a price reset, right? Just means we go to some place and we kind of sit there for hours in a frustrating, back and forth range, or we get that one time framing, just slow incremental, burn down, and which would be, maybe for example, 70, 80 points down in the NQ, 40 to 50 points up. So another 70, 80 down, another 40 to 50 points up, and just keep doing that all day long. Uh, so don't watch the ATRs. It's definitely going to expand if we start getting below 23,800. Don't get ATR'd out of your trades. But you have to manage risk accordingly. Don't buy the bottoms, and don't sell the bottoms and don't buy the tops. Wait on some retracement. You should get some retracement today. to get in your entries and try to get a good location for what you're in. And it should be a sawtooth down is what I'm thinking is if we can break this. I hope this helps. Watch the VIX too, right? You can see the VIX is went from 1550 up to 16 so far in the overnight. It's going to have to keep one time framing higher if the market's going to one time frame lower. Otherwise, we're just at the bottom of the range and we'll have to see what happens. Remember, we're positioning expects the bottom of the range to be right now for the day. So there's no guarantee that we're going to fall out of bed, even though that was the worst print ever this morning. Uh, have a good one, and I'll talk to you tomorrow. We'll see.